So in terms of our current market forecast, we cannot definitively say one way or the other that we've gone into a full-blown bullish rally based on a bear market truncation model, or that we're going to have a one leg lower. And the reason that I say that is we're right at the point in which we'll get the information necessary to kind of put all of that together. Let's go ahead and blow up this chart. It is our daily chart, and it has our most detailed count that we're working with right now. Long wave down 3, wave 4 is an A, a B, and a C. Then we have this market moving down in terms of this is our 4th wave, of course, right here. We then go into our 5th wave. And in our 5th wave, we've easily identified a wave 1. I believe we've identified a wave 2. I believe that this is the conclusion of 3. And here's the key. As you can see, when you look at this chart, we are not quite at this apex or at this point in which we would see the market trade and break above. Although we've had this dramatic breakout, it really needs to break above this particular point where these two lines intersect. And right now, as you can see, it's actually found a little bit of resistance, closing at I believe 48 to 46, but clearly we see resistance in this area here. We see it was a resistance area here. We see here it being support. So this is an interesting point, and here's the second not opportunity, but the second option, I should say, in how this might unfold or play out. My sense is right now we've had this A, B, and C. We go 1, 2, 3. We get our 4th wave here, and our 4th wave really cannot go into the territory of 2. And because it cannot go into the territory of wave 2, it would really have to stop roughly in this area, come back down. This would be our final wave 5. 5 would in fact conclude or terminate the entire 5 count down, and then we would go into our ABC, but it would be after having one more sell off, one more price low, so to speak, that would go below this 1181 and 1186 that we see here. Now I've put the point of 1150 in there, and I've marked it with this dotted line, and there's a reason that to me is pretty significant. And you can really see that, of course, when we go ahead and compress the chart. This particular mark, 1150, is our longest retracement. And it is our retracement from the entire rally that we saw beginning in 2008 and concluding 3 ways through 2011. And so when you look at that, and then you look at this being the 61%, you can see how important that is. So my sense is that what I believe we'll probably see is this 5th wave terminate with one more leg down below the recent low of 81, possibly as low as call it 1150, and then move into our A, B, C counter trend in our current bear count.